Good afternoon to one and all. Myself Rushit. I chose for topic was Indian economics of reforms in 1991. The government has introduced in reforms in 1991. The 1991 for addressing the economical crisis, the improving economy and foreign investment. The presently and max and microeconomics and stabilization and structure. The main objective for economical policy in 1991, the globally economy in more and market position, the growth rate of the economy of the create the foreign assets, the international flows like goods and capital and technology and human resource and etc. Let I explain about the liberalization. The economy through these measurements and the Indian modern economic markets, modern economic and at a market economy. The foreign investments and private sector and competitions to allow the great market competitions, the economical growth and primarily the removal of the license rights and commercial. It has the commercial banks gives the freedom to resolve the interest. HDFC Bank and ICICI Bank. Let I explain about the privatization. Private sector industries wherein previously resource and government sectors and transferly only the opportunities and previous government owned and entrepreneurs to the private sectors. The initiatives like industries, market and finance sectors reforms and tax reforms and etc. Let I explain about the globalization. The economy is more turned to foreign investments and global trade. The foreign companies investment in India to boost industries like telecom, banking and manufacture. The government over control the business and allow the private companies the growth. The Indian economical reforms in 1991, the growth, GDP growth and sector and dimensions and impact. The India sustainable rate is the growth rate from 5.6% during the 1980 to 91, the 82% during the 2007 and 12. The mainly drive in the sector. The setback of the rate across during 12 and 15, the sector the continued the development the positive within 9.8% is the growth rate in 2014 to 15. The growth rate of the GDP in major sectors. The foreign investment and reserve. The foreign investments money are assets like US dollars and gold. The Indian report were stable. It mainly imports and control inflation, maintaining the value of the Indian rupee is in global market. Export dimension. The growth, the significant impact as export dimension and strong between increasing the exports and volume, the rise of GDP, employment and the growth rate. The gross domestic product has been set over the years to make it one of the fast growth and economical world. Agriculture reforms in impact. The major sector to be contributed government introducing the changes in policies and rule to improve in productivity and income of the farmers and food supply.